Hey everyone, ready to dive into some serious trading psychology?
Always ready for that.
So today we're cracking open Brett Steenbarger's The Daily Trading Coach.
Oh, yeah, great book. Classic.
Seriously, it's packed with insights on how to up your mental game in trading, become a stronger, more resilient trader.
Totally. Steenbarger really gets that trading psychology is just as important as any technical strategy.
Absolutely. I think it's so easy to get lost in the charts and the indicators.
Oh, yeah.
But this deep dive is about you
Right.
becoming your own trading coach.
Love that.
So where do we even start with that? What's step one?
Well, one of the coolest things Steenbarger talks about is how emotions can actually be like change agents.
Change agents.
Yeah. A lot of people think that to be a good trader, you get like this emotionless robot.
Right.
But he says that's not true at all.
Okay, so then how do we use emotions to our advantage instead of letting them, sabotage our trading?
Well, think about it this way. If someone had a brain injury, right, and they couldn't process emotions,
Mm-hmm.
their behavior would be all over the place.
Yeah, that makes sense.
Emotions are actually a part of how we make rational decisions.
So it's not about ignoring our feelings, it's more about understanding them.
Exactly. Neuroscience actually backs that up. The goal isn't zero emotion, but getting information from those feelings.
So it's like learning to read a new language.
Yeah, I like that. Language of your own mind.
Okay, I can dig that. So, if I'm feeling frustrated after a bad trade,
Yeah,
that's not just me being a sore loser, it's like a signal of something.
could be. That frustration might be telling you to look closer at your trading plan.
Okay.
Or maybe your risk management isn't tight enough.
Right.
Steenbarger talks about this guy, James Pennebaker, who found that journaling about your feelings,
Oh, interesting.
or even just talking about them, helps you process them.
So next time I'm about to rage tweet about the market, I should maybe journal instead.
Probably a good idea, yeah. And, this ties into self-confidence, which is super important for traders.
Oh, absolutely.
But it's not just about having a winning streak.
Right, because even the best traders have losing trades. So confidence can't be tied to just wins and losses.
Exactly. Steenbarger calls it self-efficacy, that belief in your ability to control what you can control, which is your process. You can't control whether the market goes up or down,
Right.
but you can control how you react to it.
So how do you actually build that unshakable self-belief, when the market feels so unpredictable?
Well, Steenbarger tells this great story about a trader who, get this, actually made more money on his winning trades than he lost on his losing ones.
Wait, so he was winning more than he was losing?
Technically, yes, but he took so many losses that it just crushed his confidence.
Oh, wow. So even if you're technically winning more often, the overall feeling can be really damaging.
Exactly. It's a trap to focus only on wins and losses. Instead, ask yourself, did I follow my plan? Did I manage my risk well? That's where true confidence comes from.
So we're separating the process from the outcome. That's a good distinction. Now, trading is stressful. Any way you slice it, right?
Oh, yeah.
How do we deal with that pressure? How do we make sure it doesn't, take us over?
Well, there's a difference between stress and distress.
Mm-hmm.
Stress is that natural response to challenge. Like, when you're driving in a blizzard, it can actually be motivating.
Okay, I get that.
Distress is when it becomes overwhelming. Like if you were driving in that same blizzard, but in like a beat-up car with ball tires.
Oh, yeah. That would be terrifying.
Right. So how do we make sure trading stress doesn't turn into that kind of distress?
Yeah. How do we stay calm and collected when everything's going haywire?
Preparation. Think of your trading plan as those snow tires and a well-maintained car. It gives you that feeling of control even when things get rough.
That's a great analogy. Knowing you've got a plan, even if the market's freaking out, must make a huge difference. And speaking of freaking out, we can't forget about market volatility, right? Which seems to be everywhere these days.
Volatility. Exciting, but yeah, it's a big source of frustration for a lot of traders. The key is to adapt your strategy based on how wild or calm the market's being.
Right, because what works in a super volatile market might not work when things are quiet.
Exactly. It's like using the wrong tool for the job. Steenbarger sees this all the time. Traders set their stop-loss orders too tight in volatile markets, and then they get stopped out constantly. And then when things calm down, they take too much risk.
Yeah.
It's like bringing in an umbrella on a sunny day and then forgetting it when it pours.
So how do we adjust to these market mood swings? Is there a way to kind of measure volatility so we know what we're dealing with?
There is. Steenbarger suggests looking at the past 20 days of trading. Look at the difference between the highest price and the lowest price each day. That gives you a sense of the recent volatility, like a little snapshot of how the market's been behaving.
Okay, so we use that info to know if we're dealing with a calm market or one that's going crazy. And then what?
Then you adapt. You might widen your stop losses if things are volatile so you don't get shaken out of good trades. Or you might be more cautious with your position size if the market's super quiet, because, one big move could wipe you out.
Right. Okay, that makes a lot of sense. We're taking control instead of just, reacting blindly to whatever the market throws at us. Now, before we go too deep into all that, I want to talk about something that's often overlooked in trading. Well-being.
Ah, yes. Very important.
It's not just about the money, right?
Absolutely not. This is where things get really interesting. Steenbarger argues that happiness and feeling fulfilled, they're not just some fluffy bonus. They actually fuel your learning curve.
Wait, so being happy makes me a better trader. Sign me up.
It's true. He tells this story about a trader who absolutely loved the markets. Trading wasn't just a job for him, it was something he was truly passionate about. And that passion actually made him a better trader.
Because he was enjoying the process, not just obsessed with making money every second.
Exactly. He had this intentionality, this focus on being present in his trading, not just going through the motions. And that's what leads to those flow states.
Flow states, where it all feels effortless.
Yeah, exactly. Like when an artist is so absorbed in their painting, they look up and hours have gone by.
Totally. So it's that same kind of focus and engagement that can make trading feel, I don't know, almost magical.
It can. Steenbarger even compares it to, like, a horse whisperer.
A horse whisperer.
Yeah. They have to be so tuned in to those subtle cues to understand what the horse is saying.
Wow, okay. That's a powerful image. So it's not just about analyzing charts. It's about cultivating that quiet inner space where we can really hear what the market's telling us.
Exactly. It's about developing that serenity, that calmness of mind that allows your intuition to really shine through.
Okay, so it's not just about being smart. It's about being present, being in the moment, being, truly engaged with the market.
Exactly.
This is blowing my mind. We're talking about so much more than just like technical analysis here. This is about becoming a better, more well-rounded person, and that translates into better trading.
It absolutely can. It's a holistic approach. You're not just a trader. You're a human being with thoughts, feelings, and experiences that all come into play when you're making decisions in the market.
Wow. This is amazing. Okay, so we've talked about emotions, self-confidence, stress, volatility, even happiness. What else is there? I mean, this is a lot to take in.
Well, buckle up. We're just getting started. Next, let's talk about building resilience, that ability to bounce back from setbacks. Because let's face it, in trading, you're going to have losses. It's inevitable.
Okay, bring it on. Let's talk about how to turn those losses into lessons. I'm ready to become a more resilient trader.
So we're talking about resilience.
Yeah.
Right? Like, how do we handle those inevitable losses in trading?
Yeah. I mean, everybody loses sometimes, but how do we make sure those losses don't, totally derail us?
Right. Well, Steenbarger tells this story about 3 traders. All experience the same losing trades.
Okay.
And it really illustrates how differently people react to those losses. So the first trader gets totally discouraged, just gives up completely, throws in the towel,
Yeah.
The second one gets desperate to win back what they lost.
Oh, I've been there.
Right. And they end up losing even more. It's a recipe for disaster.
Yeah, for sure. So what about the third trader? What do they do?
The third trader, that's the one who demonstrates resilience. They step back, take a breath,
Yeah.
reassess the situation,
Okay.
and they wait for a better opportunity. Instead of panicking or letting emotions take over, they use that loss as a chance to learn and grow.
That sounds a lot harder than just freaking out, honestly. How do we actually cultivate that kind of resilience?
Yeah. Well, Steenbarger uses another great analogy here. He talks about how communities prepare for natural disasters.
Okay.
They draw up plans, they conduct drills, so they're ready when the inevitable storm hits.
So we're basically preparing for those, trading disasters before they even happen.
Exactly. He calls it generating and rehearsing plans for things that can go wrong.
Yeah.
You're mentally preparing yourself for those tough situations so you can react with a clear head.
Right. Instead of from a place of fear or panic.
Exactly.
Okay, that makes a lot of sense. So instead of letting those losses, send us into a spiral of self-doubt, we use them as fuel to improve our trading game.
Yeah, precisely. And you know what's a fantastic tool for learning from your experiences and building that resilience? That trusty trading journal. It's more than just like a place to track your wins and losses.
Right.
It's a way to really understand yourself better as a trader.
We've talked about journaling a bit, but what exactly should we be writing about? Is it just noting down the trades we made?
It's so much more than that. Think of it as consciously working on those areas where you know you can improve. Steenbarger have this suggestion. At the end of each trading day, give yourself a grade based on how well you followed your rules.
Yeah.
Were you disciplined? Did you manage your risk? If you got anything less than a B, that becomes your goal for the next day.
I love that. It's like having a built-in accountability system. But how do we go even deeper? Beyond just the mechanics of the trades, how do we understand those deeper psychological forces at play?
Well, Steenbarger encourages us to explore the psychodynamic perspective.
The psychodynamic what now?
Yeah, it might sound complicated, but the idea is basically that past conflicts and experiences can show up in our trading behavior.
Hold on, are you saying that something that happened in my childhood could affect how I trade today?
It's possible. Let's say you have a history of feeling frustrated in relationships,
Okay.
and then suddenly the market does something that triggers that same feeling.
Yep.
You might make an impulsive trading decision based on that old familiar frustration, not on what the market's actually telling you.
Wow, that's kind of scary. So how do we uncover those hidden connections, those old patterns that might be messing with our trading?
Well, Steenbarger suggests analyzing both your life experiences and your trading experiences,
Okay.
looking for common emotional themes. It's like becoming an archaeologist of your own mind, digging up those buried artifacts that might be influencing your present.
Okay, so we're getting pretty deep here. We've explored the past. Now what about the present? How do our thoughts and beliefs impact our trading decisions, in real time?
Well, that's where the cognitive approach comes in.
Okay.
It's all about understanding the mental frameworks we use to make sense of the world. Steenbarger calls them schema.
Schemas.
Yeah. The problem is sometimes those schemas are distorted, like perfectionism or blaming yourself for things you can't control.
So, if I believe that I have to win every trade to be a good trader,
Yeah,
that's going to mess me up.
definitely. That kind of thinking can lead to some really bad decisions. You might hold on to losers for too long or take profits too early because you're terrified of being wrong.
Right. It's like those automatic thoughts we were talking about earlier, those little voices in our heads that can totally sabotage us.
Exactly. Those thoughts can become real performance killers.
Yeah, for sure.
But the good news is, with awareness and the right techniques, we can learn to recognize those negative patterns and change them. We can rewrite those scripts.
Okay, so we're basically rewiring our brains for trading success. What are some of those right techniques we can use to manage those thoughts and emotions?
Well, Steenbarger talks about the power of behavioral techniques. And one thing he points out is that strong emotions can actually speed up learning,
Wait, really?
both positive and negative.
So when we're feeling those really intense emotions, that's an opportunity to learn and grow.
Yeah, think of it like this. If you touch a hot stove, you learn really quickly not to do that again, right?
Yeah.
The pain speeds up the learning process.
Okay, yeah, I get it. But pain in trading usually means losing money.
Right, but the point is, those strong emotional responses can be really powerful teachers. We just need to learn how to harness that energy for good.
So how do we do that? How do we channel those emotions in a way that helps us, not hurts us?
Self-coaching. It's about recognizing those knee-jerk emotional reactions and learning to manage them, instead of letting them control you.
So it's not about eliminating emotions altogether. It's about becoming the master of our emotions.
Exactly. And remember, we don't have to do this alone. Steenbarger also highlights the power of social learning, connecting with other experienced traders
Okay.
for feedback, support, and to learn from their experiences.
Right. It's like having a team of coaches in your corner, helping you see those blind spots and, cheering you on.
Exactly. Now, let's shift gears a bit and talk about something just as important as all the psychological stuff. Treating your trading like a business.
Okay, so we're not just playing around here. We're building a legitimate enterprise.
That's the mindset. You need a solid plan, enough capital to weather the storms, a good risk management strategy, and a constant flow of new ideas, just like any successful business.
So we're not just looking for that one magic strategy. We're building a sustainable operation.
Right. And just like a business owner tracks key metrics to understand how things are going, so should you. Steenbarger recommends analyzing your trading data to see what's working, what's not, where you're strong, and where you need to improve.
So we're not just making trades based on gut feeling. We're looking at the cold, hard data.
Exactly. Steenbarger actually uses a great analogy here. Imagine a cafe owner, right, who wants to increase sales.
Okay.
So they add tea to the menu alongside coffee. But it doesn't make much difference. Why? Because tea and coffee are too similar. They don't truly diversify the offerings.
Ah, so if I'm only trading one type of setup or in one market, I'm basically that cafe owner with just coffee and tea on the menu.
You got it. Steenbarger calls for true diversification in trading.
Hmm.
Don't just trade similar assets or strategies.
Okay.
Think about diversifying across different time frames, different market directions.
Yeah.
You know, buying A and D selling, and even different types of setups.
So instead of putting all my eggs in one basket, I'm spreading them out, just like a good business owner would spread their investments.
Precisely. You're creating a portfolio of trading businesses, each with its own unique characteristics and potential for profit. Now let's go back to the psychology of trading for a minute.
Sure, we've covered a lot of ground, but I'm ready for more. Where do we go from here? So we've talked about, treating trading like a business, diversifying our approaches, all that. But I'm curious, what about those traders who have actually made it, like walk the walk? What can we learn from their real world experiences?
Yeah, well, Steenbarger shares some amazing stories in the book. One that really stuck with me was about a trader named Chris. This guy actually went bankrupt multiple times before he finally figured things out.
Whoa, multiple times. That's rough. So what was his secret? How did he finally turn things around?
Well, one thing that's really striking about Chris is that he took full responsibility for his trading. No blaming the market, no giving up.
Okay.
He just kept learning, refining his approach until he found what worked for him. He even started small, trading just one contract, and only increased his position size gradually as he gained confidence.
That's a good lesson. I think a lot of new traders, they come in thinking they're going to get rich quick.
Oh, yeah.
And they jump in with way too much risk. It's like trying to run a marathon without ever training.
Exactly.
Hmm.
Chris also emphasizes the importance of discipline, especially when you're trading your own money.
Right.
There's no boss looking over your shoulder, no risk manager. You have to be the one to set the rules and stick to them, even when your emotions are screaming at you to do something else.
Oh, yeah. That's so hard. It's so easy to get caught up in the heat of the moment and just make those impulsive decisions we talked about. So how did Chris handle that?
He had what he called a disaster plan.
A disaster plan.
Yeah. Basically, he thought through all the worst-case scenarios
Okay.
and made a plan for how he would react. It's like having an escape route mapped out in case of a fire. You don't want to wait till the smoke is filling the room to start figuring out how to get out.
Right. Makes sense. That must have given him a lot of peace of mind.
Oh, yeah, definitely. Chris also talked about how journaling was super important for him, not just for, tracking trades, but for really working through those inner, he called them demons and obstructions.
Demons and obstructions.
Yeah, those emotional and psychological roadblocks that were holding him back.
Wow, that's deep.
He even started a public blog to share his journey and hold himself accountable.
So he basically turned his journal into a tool for self-discovery and a way to connect with other traders.
Exactly. Now, Chris isn't the only trader Steenbarger features. He introduces us to a whole cast of characters, each with their own unique approach to the market.
That's what I love about this book. It's not a one-size-fits-all approach. It recognizes that what works for one trader might not work for another. So tell me, what are some of the nuggets of wisdom we can get from these other successful traders?
Well, there's Trevor. He really emphasizes finding a trading style that fits your personality. What are your strengths? What are your weaknesses? How do you make decisions?
That's a great point. I think a lot of people get caught up trying to force themselves into a style that doesn't really suit them. It's like trying to fit a square peg into a round hole.
Exactly. It's about finding that sweet spot where your natural talents and tendencies align with, the demands of the market.
Okay, so we've got Trevor. Who else?
There's Michael. He swears by the power of trading affirmations.
Trading affirmations.
Yeah, basically positive statements that you repeat to yourself to reprogram your subconscious mind.
So instead of saying, I'm going to mess this up, I would say something like, I am a confident and successful trader.
Exactly. It might sound cheesy, but there's actually a lot of research showing how powerful that kind of positive self-talk can be.
Huh. Okay, I'm willing to try anything that will give me an edge. Who else is in Steenbarger's, Hall of Fame here?
Well, there's Brian.
Yeah.
He emphasizes tuning out the noise and trusting your own judgment. Filtering out all those opinions and market gurus,
Right.
relying on his own analysis and experience. It's about developing that inner compass that guides you through those turbulent market seas.
Love that. Okay, who else?
Corey, he had a breakthrough when he started viewing the market conceptually
Conceptually.
instead of just focusing on individual indicators or news reports. He compares the market to a grand chess game
Oh, interesting.
where you have to think several moves ahead and anticipate your opponent's actions. It's about understanding those underlying forces that are driving the market, not just reacting to the surface level movements.
So he's like stepping back and looking at the bigger picture.
Exactly. Corey also talks about the importance of intermarket analysis, which is basically looking at how different markets are interconnected and influence each other.
So, like, instead of just looking at the stock market, I might also look at bonds, commodities, currencies, that kind of thing.
Exactly. It's like expanding your field of vision beyond your own little corner of the market. You start to see those bigger picture patterns and relationships.
Okay, so we've got Trevor, Michael, Brian, and Corey. Anyone else?
Oh, yeah, tons more. There's Charles, who's all about meticulous record keeping. He has what he calls his B book.
His B book.
Yeah, it's basically a detailed log of all his trades, his analysis, his wins, his losses, everything.
So he's not just relying on his memory, he's actually documenting everything.
Right. He says it's like a treasure trove of trading wisdom. It lets him track his performance over time, identify his strengths and weaknesses, and, refine his approaches.
It's like having a personal trading coach right there in your notebook.
Exactly. And then you've got Jason Goffert. He stresses the importance of writing down every single trading idea, whether it's a brilliant insight or a total blunder. He says it keeps him honest and prevents him from getting too high or too low emotionally.
So no matter how I feel about a trade, good or bad, I should write it down.
Absolutely. It's like having a record of your thought process,
Okay.
those internal debates that led to your trading decisions.
That's interesting, yeah. Because sometimes it's hard to remember why we made a certain trade, especially if it didn't work out.
Exactly. Now, Dave Landry has a really interesting perspective. He emphasizes the importance of learning to be wrong.
Wait, what? We're supposed to be learning how to be right.
Of course, we want to make profitable trades, but Dave's point is that not every trade is going to be a winner. It's about accepting that losses are part of the game and learning how to manage them effectively.
So instead of beating myself up over every loss, I should be focusing on how to minimize those losses and maximize my wins.
Exactly. He even says that win rate is overrated.
Yeah.
What really matters is your risk-reward ratio, how much you make when you're right versus how much you lose when you're wrong.
Right. It's not just about how often you win. It's about the overall profitability of your strategy.
Right. Now, Rob Hanna brings a really unique perspective. He approaches trading like a scientific research project.
So he's not just following his gut, he's actually testing his ideas and gathering data.
Exactly. He's a big believer in using statistics to track his performance and identify those strategies that are truly working. He even uses statistical software to analyze his trades and generate reports. It's like having your own personal trading lab.
That's so cool. I love that he's taking this data-driven approach to trading. It takes some of the emotion out of it, helps you see things more objectively.
Absolutely. Now, Jess Miller stresses the importance of having a system or method that you trust, one that's been back-tested and proven over time.
Okay.
But he also talks about doing regular, performance reviews.
Performance reviews for your trading system.
Yeah, making sure that system's still working and that you're not just riding a wave of good luck.
So even if my system's been profitable in the past, I need to keep monitoring it, make adjustments as needed.
Exactly. The market's always changing, so your approach needs to evolve as well.
Mhm.
He also encourages traders to develop a pipeline of new ideas.
Okay.
Be constantly learning, refining those approaches. It's like being a shark. You got to keep moving forward or you'll sink.
Right. Now, we've talked a lot about systems and strategies, but what about the more practical stuff? Like, how do these successful traders manage their time and stay focused, with all the distractions out there?
Well, John Foreman highlights the importance of routine. Having a structured approach to your trading can help you stay disciplined and avoid those distractions.
So it's not just about having a good strategy. It's about having a solid process for executing that strategy.
Right. He also recommends having a plan for each trading day, including your entry and exit points, your risk management parameters, even visualization exercises
Oh, wow.
to mentally prepare for the challenges ahead.
So it's like having a game plan for each trading session.
Exactly. Now, Reed Barros, he's another big proponent of journaling. But he tracks not only his trades, but his emotions too,
Okay.
and those behavioral patterns that can sabotage his performance. It's like being your own sports coach, tracking your stats and looking for ways to improve your game.
I love that analogy. So who else is on our all-star trader lineup here?
Mike Bellafiore has an interesting piece of advice. He says we could actually study our trading statistics,
Hmm.
even those trades that we thought were complete disasters.
Wait, really? Even the ones that make us want to crawl under a rock?
Yep. He tells a great story about this particularly painful loss he took in a stock called SNDK.
Okay.
For weeks, he swore he'd never touch that stock again. But then he looked at his stats and realized that, aside from that one bad trade, he actually had a positive track record with SNDK.
Wow. So our perceptions of our trading can be totally skewed by those emotional experiences. The numbers tell a different story.
Exactly. It's a good reminder to trust the data, not just our feelings. Mike also highlights the importance of having a network, other traders who can offer support, feedback, and a different perspective.
It's about having that community,
Right.
of learning and growth, where you can share experiences, challenge each other, and push each other to become better traders.
Right. Now let's talk about Rennie Yang. He's got some creative techniques for using the NYSE tick indicator to gauge market sentiment and identify potential trading opportunities. He even has a formula for calculating a cumulative tick indicator, which can help you see those subtle shifts in market momentum.
Okay.
And lastly, Henry Karstens. He emphasizes the importance of really leveraging your core competencies, those skills and talents that make you unique as a trader. But he also encourages traders to cultivate creativity, constantly be seeking out new ideas and approaches to stay ahead of the curve.
Right, like never stop learning.
Exactly. It's like being an artist, constantly experimenting and pushing the boundaries of your craft. And of course, collaboration is key. He believes in working with others, sharing ideas, and learning from each other's experiences.
It's a good reminder that we're all in this together. We can achieve so much more when we support each other and share our knowledge, which is what we're trying to do here.
Right.
Now, it's really touching how Steenbarger ends the book talking about his mom, Constance.
Oh, yeah, I love that part.
She was an artist and an art teacher, and she taught him the importance of seeing the specialness in each individual. That brings a very human touch to this whole concept of trading, doesn't it?
It does. It reminds us that trading is more than just numbers and charts. It's about people, about connecting with others, and about using our talents to make a positive impact on the world.
Beautifully said. So as we wrap up this deep dive into the Daily Trading Coach, what are the key takeaways for our listeners? What do we want them to walk away with?
I think the biggest takeaway is this. Becoming a successful trader, it's about so much more than just the technical stuff. It's about mastering ourselves, our emotions, our thoughts, those deeper psychological patterns that can sabotage our success.
It's about self-awareness, resilience, discipline, and that unwavering belief in our ability to achieve our goals.
Exactly. It's about embracing the journey with all its ups and downs and never giving up on that dream of becoming the best trader you can be.
I love how Steenbarger puts it. He says, science strives to achieve unity of fact. Art strives to achieve unity of feeling. As traders, we need both. The science and D, the art. The head and D, the heart.
We need to find that sweet spot, where knowledge and intuition converge, where logic and emotion dance. That's where the magic happens.
That's where we create those trading masterpieces. So to all our listeners out there, go forth and become your own trading coach. Embrace the journey, build those winning habits, and never stop learning, growing, and evolving. The market's waiting. Your success is waiting.